Good morning, everybody. How y'all doing? How y'all doing? Hopefully everybody's doing well. Hopefully everybody enjoyed your weekend. Had a fantabulous weekend. Hopefully all the beautiful mothers out there enjoyed their Mother's Day. Um, we had a good time. Spent time with me madre. Uh, Again, hopefully y'all enjoyed. If this is your very first time tuning in, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but give you a nice hearty well, thank you for always tuning in to Tim's Tidbits. My name is Timothy Lee Rogers Sr., aka Aranya Grande. For my non-Spanish speaking compadres, that's Big Spider. You hear me? And I'd like to welcome you to another episode of Le Overnight Price Action Review. How y'all doing, man? Y'all know I'm a fool. Who in the chat, man? Got here to learn and share in the chat. The birds are still soaking wet. Here to learn and share. Good morning to you. The birds are still soaking wet because it's still raining. Still raining. What's up, Rhonda Green? What's going on, Tish? Buenos dias, Valdez. Buenos dias. Good morning, E-Rock. The Black Al Davis. See, wait a minute. Al Davis. Wasn't Al Davis black? Why did I think Al Davis? Oh, let me see. I got to look that up now. I got to look it up. Al Davis. No, Al Davis is white. I'm thinking about somebody else. Who am I thinking about? I don't know who this man is. And this guy is like look like he was a coach for the Raiders. Yes. Yeah, I don't know who this guy is. So, okay. I don't know. Who am I thinking about? I don't know who I'm thinking about. Because I don't know who this guy is. Never seen it. I don't know why I'm thinking Al Davis. I don't know what name is in my head. What's up, Seawalk? What's going on? Hola, Valentin. Buenos dias, Valentin. Buenos dias. Michelle. What's up, Michelle? What's going on? Put me big on the screen. Oh, he was the owner of the Raiders. Okay. What's up, Kareem? What's up? Well, honey, you got him my way. What's up, Kareem? What's up? I'm not thinking Al Green. Nah. You better stop playing with me because I know who Al Green is supposed to be. Hey, man, let's go ahead and get into this overnight price action, man. Let's get into this overnight price action. What's up, Deborah? What's up, Deborah? Let's find 6 o'clock p.m. 6 o'clock p.m. 6 o'clock p.m. 6 o'clock p.m. Hey, before we get started, for those people, not the true mentees. When I say the true mentees, let me go full screen on this. If you are a true mentee, meaning you really don't know how to trade, you're very interested in it, you're trying to learn how to read price, you don't have a model. When you've tried to trade in the past, it just blew up in your face. You just stuck like Chuck, this ain't for you. Because for those mentees, we're just learning how to read price. We ain't ready to get to no trading or nothing. But for those that like to dabble, and you're dabbling, and you're just looking for a model that can work for you, or you have a model and you just want some fine tuning on how to make your entry. Like you understand the concepts, but you can't fine tune how to make your entry, or you second guess making your entry. Because I know it's hard to take that trade when prices run at you, when it's running straight at you. I know it's hard. So what I'm going to do, I'm going to share a little entry technique that I use personally myself. This is how I enter 90% of my trades. I don't care if I'm trading off of a fair value gap, a breaker, an order block. I don't care what I'm trading off of. This is how I enter 90% of my trades. Some trades I use the concepts, but I just trade the momentum. But 90% of my trade entries are done like this. And I'm going to walk you through it. I'm going to walk you through it here on the NQ. I'm going to walk you through 90% of my trades are done like this. Notice this here. This is a trade projection thing that I use to project how much I'm going to risk and all of that. Get out of my way, microphone. So, see this green box here, right? That is a 15-minute fair value. Hey, where did everything go? There it is. That is a 15-minute fair value gap. Now, when I'm trading fair value gaps, right? When I'm trading fair value gaps, since it's a fair value gap trade, this is what I'm talking about. But the entry technique, when I get to the entry technique, all of that is the exact same. But when I'm trading fair value gaps, right? If you're a note taker, get out your notes, right? If you're a note taker, get out your notes. So if I'm trading fair value gaps, so when trading fair value gaps, I like for the box to be open. In my box, there it is. All right. When trading fair value gaps, one, if I'm not sure, if I'm not sure of the bias, if not sure of the bias or draw, right? If not sure of the bias or draw, right? I only look. I'm gonna take the I out. All right. Only look to trade strong fair value gaps. Right. Well, Tim, what's a strong fair value gap? A strong fair value gap, right? Strong fair value gap is when price is moving the same direction on all three candles. All right. So when I'm trading fair value gaps, and I'm not sure about the like not 100% confident about the draw or the bias, right? I only look to trade strong fair value gaps. Only if I ain't sure, if I don't get a strong fair value gap, it's gonna go without me. But if I'm positively sure about the draw, it can be any fair value gap. You know what I'm saying? It could be any fair value gap. Meaning, like, if like for this fair value gap right here, this BISI I got marked out. See, this is a strong fair value gap, right? We got a green candle here, an expansion candle that's green, and then we got an expansion candle on the third one that's green. So that's a strong fair value gap. That's like you got an expansion candle, which you anticipate in this not to fill until something happens, and then all three candles are green. So that's a strong fair value gap. That's what I mean. Strong fair value gap. Now, in this case right here, it wouldn't have made no difference if this was a strong fair value gap or not, because, you know, in this case, it was clear that price wanted to go up. But I only trade strong fair value gaps if I'm not sure of the thing. Now that we got that out of the way, we are retracing back into my anticipatory reactionary point, right? Which is this 15-minute fair value gap, right? My 15-minute fair value gap. Yes, it is 15-minute. That's 60. Yes, 15-minute fair value gap, right? We're trading back into that. When price trades back into this, right? I want to see price give me an entry setup respecting the upper portion. 50% or higher, preferably 25%, but 50% or higher or 50% or lower if it's bearish, right? So when price comes into my anticipatory reactionary point, right, I'm going to grade it to get my what's the name on, right? Then I'm going to go down. I'm dropping down to the 1 minute here because that's a 15-minute fair value gap. So I'm going 2 time frames down. I'm going to my entry time frame. Okay. Now that I'm on my entry time frame, price has, let's go back. I want to walk you through it. I want to walk you through it so you'll understand what I'm saying. Let me put, this is when we came into it right here. This is kind of when we came into it. So now this is the anticipatory reactionary point. We're coming back to it, right? On this time frame. It's the same time frame. When the same time frame is coming back to it. Now it's coming back to it. That's the counter when to get back to it. Now, boom, I'm dropping down because we've traded back to it. Right. So this is when it started. This is when this counter started. And right there is when it hit it. Right. Right there is when it hit it. Boom, we've hit it. So boop, I'm dropping down to the 1 minute right here. I'm dropping down to my entry time frame right here. Soon as that happens, let me go back so I can show you what I'm talking about. Let me show you what I'm talking about. Boom. So now, in real time, this is what the chart looks like in real time, right? So now you see we've gone up on this lower time frame. We've gone up and we've came from this area, went down, came back up, boom, to that area, and then we've reversed back down, right? If you are advanced and you know how to trade both ways, once we complete this very familiar looking move right here, like that, boop, when we got back up there, you could look for something there to come back short to your anticipatory reactionary point if you're very skilled at it. Just do this same thing reverse and just expect to hold it for a shorter amount of time because you're going against the grain. The same thing I'm talking about now, but in reverse. Okay, so now that we are here, right, we've come back to this is our anticipatory reactionary point. Now we're inspecting what's going on inside here. Here is our 25%. This is where we want it to react at, right here. And we notice there's a BISI right there, right? Here's our 50%, right? This is our, last line in the sand. We need to see respect there, right? We're expecting what's going on at the 50%. At the 50%, we see a small BISI right there, right? Along with an order block right there, okay? This order block has traded down into an order block there, right? We also got this humongous one here, right? So you got a bunch going on. You got a humongous order block, got a teeny one there, and then this order block has traded into that and taken off, acting as a propulsion block, right? So we're looking at all of that. We're taking all of that into account. But we want to see the reaction in this area. We'll take it in this area, right? So we're just watching price, right? We're watching price right now. Do, right? We come into this BISI right here, right? If you're comfortable with just taking price soon as it hits the PDub rate, you would be in right here. You would be in right there. Let's do it. Let me map it out. If you are super comfortable with taking entries when it touches the PDub rate, you would be in right here on this candle. Boop. You're in on that candle. Your stop loss is below this. Probably, I think it's this low. Let's go back to the 15-minute and see. Okay, no, it's further. So the 15-minute right there, right? Your required stop would be down here below the low of the candle. That's your mandatory stop. Below the low. Well, your mandatory stop would be below the fair value gap, right? That's the mandatory stop. Your safe stop would be below the low of minimum stop below the fair value gap. Smart stop below the low of the candle of the BISI, and then the safe stop would be below the swing low that the BISI is in, right? So in this case, we're just going to go with the what's the name? Like the whatever you want to call it, the smart stop. Yeah, we're gonna call it that, the smart stop. You would be in, right? You would be into the trade already. And if you was trying to get a 2-to-1, I always try to go a little bit over, right? If you're trying to get a 2-to-1, you'll be there. And then since it's so close to the top of that fair value gap, I'll just go ahead and put it right there, maybe one tick in from the top of the fair value gap. I'll do something like that, right? Because 2-to-1 is so close to that, right? I like to shoot for at least 2-to-1. That's what I'm looking for, at least 2-to-1. Okay. That's if you're super comfortable, you're in the trade, and you're not even listening to me right now, right? So we're going to put that right there because you're in the trade already. You're not even listening to what I'm saying right now because you're uber comfortable. And right there is that low right there. That's the low of the Bissy candle right there. Okay, so now the way I do it, now, boom, we've hit it. Now I'm looking for price to give me something on the 1 minute. I want it to give me the setup on the 1 minute, right? So we're down here. We're inside this Bissy, right? Then we dip down into that other Bissy right there, right? Dip into that other Bissy. See, we're taking out that short-term sell side right there. Right, to make these candles bigger so you can see what I'm talking about. So we've come into the 25% inside that Bissy, right? We're respecting this Bissy right here. All right, let me take this drawing off. Put in this here. Okay. So we're going to make this a different color. I'm going to make this azul. Azul, azul. Azul, azul. All right. So we come down, then we dip down into this Bissy down here. Okay. We're just right now. We're still just watching price. Right, we're watching what price does inside our anticipatory reactionary point. Right, we come down right to the low of that Bissy right there, right at the high of the order block that we was watching, taking out that short-term sell side right there. Right, clickety click, come down again, kiss the 50%. Again, come down, hit the low of that Bissy again. All right. And when we came down and hit the low of that Bissy again, can somebody tell me what a goings on right here? Somebody put in chat and tell me what goings on right there with that candle that I just circled. The mentees, the true mint, the ones that's just been got aboard from when we started the mentorship, you're probably not going to know this, but we've talked about it a bunch of times, so you might know it, right? You might know it. You might know it. Now, ain't nobody gonna put nothing. Ain't nobody gonna put nothing. Y'all just gonna be quiet on me. Y'all just gonna be quiet on me. He'll learn the shit top. So, Now, this is what I want to see right here. Matter of fact, not just that. All of this is what I want to see right there. That's what I want to see. No, not a balanced price range. That's what I want to see right there. Okay. And why is that what I want to see? Because when we came here, we came down, right? We came down here on this candle right here. Remember, we're inside our anticipatory reactionary point. Okay. We're inside our anticipatory reactionary point right here. I'm drawing this box right here. All right. We're inside our anticipatory reactionary point. That's our higher time frame. Right. We dropped down as soon as we got into it. We graded it. We put it in the 4th grade, and we want to see price show signs of respecting it, at least in the upper 50%, because it's bullish in this case. Lower 50% if it was bearish. Ideally at 25. Okay, so this candle here, we came down and touched the order block and the BISI, right? And notice inside the whole anticipatory reactionary point in this case, right? You studying all price do. It ain't gonna be the same way every time inside of there, but you studying what price do inside your anticipatory reactionary point, right? So we came to the order block, right? We came touch the high of the order block, and we went to the low of the last imbalance inside our higher time frame, inside our anticipatory reactionary point, right? So when we came down here to that, okay, we pushed back up, respecting the other imbalance in this case right here. Then price traded down to the consequent encroachment of the anticipatory reactionary point. Okay, the next candle, we came down and touched the low of this imbalance, and then left it. One, that's signifying this a balanced price range now. This right here, because we've repriced it, then we've gone to the low of it and we left it. Now, mind you, these are 1 minute candles. So all of this is, you know what I'm saying, this is transpiring on sub 1 minute time frames right here inside this, letting you know that this is a balanced price range, but these wicks are telling you the story. Now, when we came and we left it like this, we closed above the opening price of this candle right here. That right there is our change in the state of delivery. Right? That's the change in state of delivery, because we were coming down, right? We're inside our anticipatory reactionary point. We handled all of our business, right? And then we closed above that candle right there, right? Once we closed above that candle right there, that's our change in the state of delivery right there. And then when we got our change in the state of delivery, we got us a fair value gap right there, right? We got us a fair value gap showing us some type of displacement leaving here. So now you pick your poison on how you want to enter trading back to this fair value gap right here. Me personally, in this case, right, I'm choosing to enter at the high of the anticipatory reactionary point. Why am I entering there? Why am I not entering at the high of this fair value gap? I'm choosing this entry point right here, the high of this, because we have our change in the state of delivery on this candle right here. Right? We got our change in the state of delivery on this candle right here. This is the candle with the change in the state of delivery. So I'm anticipating price to be willing to come back to the opening price of that candle right there. Right? I don't want to risk missing the trade and trying to put my entry at this right here. right? I don't want to risk missing the trade. So I'm entering at the high of the overall fair value gap, the higher time frame fair value gap. I want to enter at the high, because if price wants to come back here, right, my stop is going to be down here, right? So I'll be safe if price wants to come back here. But if price doesn't want to come back here, I'll get picked up because I'm entering here, right? And that's giving me, instead of having the entry be here, right, and risk 4.75 and to this high be a 2.85, then it'll be here, risk 3.75, and to that high would be a 3.53 risk to reward. All right. So now, and the difference is here, yes, you have a successful trade going from there to there, but the risk to reward is far different with a bigger move that's required. Whereas here, if you're right, the risk to reward is a bigger risk to reward. It's a 3.53 risk to reward, whereas over here it's a 2.13 risk to reward. Right. And over here, you can only trade 3 micros based off of how my settings are set. And over here, I can trade 1 mini or 13 micros. I'm not going to trade 13 micros. I'm just going to trade 1 mini, because 13 micros, the commissions is crazy. You'll be eating up most of your money in commissions, whereas with 1 micro, 1 mini, you just paying 1 small commission and you get, so better risk to reward. Now, yeah, so that's it. Quick recap. Let's push through here. Right there, and as you see, price come down. If I would have done it here, would have been picked up there, would have went up, came back down, took heat, and then but still been safe. Would have got picked up on this candle. That touch right there, I don't count that, because I don't get picked up on touches like that. This candle right here, if it just touched the price, I don't get picked up. I don't care what nobody say. It's got to touch it a bunch of times for me to get picked up, because it's a limit order. But that's a definitely pick up on that candle right there. And as you see, we went down and we touched back into that order block right there at that change of state of delivery, wick below that. This right here, I would have got picked up on this, but I wasn't trying to take the chance on it. And then, the rest is history. The rest is history. Boom. There's your 3.5 to 1 here at this high. Low hanging fruit. You know what I'm saying? Low hanging fruit, 3.5 to 1. In hindsight, it could have went a whole lot further, but I don't care about hindsight. You know what I'm saying? Because you gotta, like, look, all this you gotta hold through to get to that, right? And then if you got picked up over here, you would still be in the trade waiting to get this 2.13. You know what I'm saying? And that's right there on that candle right there at a 747 candle to get this one here. So better risk to reward, but that's not the topic of discussion. This is how, quick recap of how I do it. I have a high time frame. I typically trade fair value gaps. So high time frame fair value gap. If I'm not sure about the bias or the draw, I only trade strong fair value gaps. Strong fair value gaps are the ones with the expansion on the third candle, and all three candles are trading in the same direction, right? Just like here, we came down, you know what I'm saying? We came down to a level of, to an anticipatory reactionary point. We came to an order block at midnight, and then price reversed right here. So we boom, we hit it and we're reversing. So it's reversing. Yeah, this is a candle that closed low in the range, but we're reversing off of a anticipatory reactionary point, and it's a green candle. Then we got our expansion candle, then we got an expansion candle. So all three candles are stretching up. All three candles are coming off of a what's the name? Are coming off of a anticipatory reactionary point. So this is a strong fair value gap. Even if I didn't know what the draw was, I could use this fair value gap. But if you know what the draw is, it don't matter if it's a strong fair value gap or not. You just got to, you know what I'm saying, understand what the draw is. Boom. We get there. We get to our anticipatory reactionary point. We go down to our entry time frame. You go to your entry time frame. When you get to your entry time frame, you look for price to give you the exact same thing on your entry time frame. So here we are. We come down to our entry time frame. We handle business, right? Then price reverses. How do you know price is reversing? Because we handle business, then we get our change in the state of delivery. And once we get our change in the state of delivery, we get displacement, right? There's our displacement. There's our imbalance. We trade back to our imbalance. You're good to go at the touch. If you take it at the touch, you're it just depends on what risk to reward you're trying to go. If we take it at the touch, right, and then we want to be below our what's the name here? I changed the state of delivery there because this low should be protected. This order block is there to protect that low. What do we talk about with institutional sponsorship, right? We have our order block. We have our fair value gap, and all of that's there to protect the implied move of coming back to this buy side liquidity right there. So this area should be safe. Let me get all this junk off the things while we're doing our recap so you can see what I'm talking about. Right. So institutional sponsorship, right? We got our displacement. We got our imbalance, right? What do we leave in the week? We left our order block right there. This is our change in state of delivery right there. This candle here closed above that down closed candle there. This is our buy side liquidity that's above price in the market. All of these are requirements for institutional sponsorship, right? So all the requirements are in place for institutional sponsorship. So now these lows right here should be protected because the institutional sponsorship is implying that we're going to protect these lows so that we can attack these highs, right? Now your institutional sponsorship is in there. This is your entry time frame. If you go long at the entry there, you're looking at a 2.58, right? If you do it the way I did it, you're looking at a 3.35. And if you were lucky enough to trade it at the change in state of delivery, right, you're looking at a 5.8 risk to reward. Hopefully that made sense. Now, let's get into the overnight price action. What we talking about? Oh, y'all still typing? Balance price range, order block, engineering liquidity to move further up, change the state of delivery. Okay, change the state of delivery. Got you. Bob's your uncle. Period. Bob's your uncle. Yes, the NASDAQ is a mover. You can get at least 40 to 70 points if you get the direction. Yes, you can. Yes, you can. NASDAQ is a mover. Now, Tim, when do you trade the NASDAQ? When do you trade the ES? If price is moving bullish, I try to trade the strong one. If price is moving bearish, I try to trade the weaker one. The Nasdaq is a mover. The Nasdaq is a mover. The difference in the price of the points gets made up very quickly in the Nasdaq. If the Nasdaq is sluggish, the ES, the price of the points is a better benefit, because you get 50 points, $50 per point as in comparison to $20 per point. But I try to trade the stronger one or the weaker one. That's what I try to do. That ain't what this live's supposed to be about, but that's what it turned into. Okay, overnight price action. Sorry about that, y'all. It's 10 o'clock, 9:59. Get all this stuff out of here. Y'all see, I was up this morning watching price, so I got a lot of junk all over the screen. 6 o'clock p.m. right there. So open up, creating the bearish new day opening gap. Price started to move up. We traded back down into the new day opening. I mean, the new week opening gap on the 8 p.m. candle at the Asian kill zone open. Traded back down to the new week opening gap into this volume imbalance right there. We got a volume imbalance right over here on the 630 candle, between the 615 and 630 candle. Traded back down into the new week opening gap. The next candle came down and touched that volume imbalance again. Looked like it went right to the low of the volume imbalance. Then we pushed up, creating a BISI, taking out the short-term buy side there, creating a BISI. The 9:15 candle, we traded back down into that BISI, overshot it a little bit, pushed up, took out the short-term buy side again, traded back down, came back down into the initial consolidation area here. From when we started moving there, traded back into that initial consolidation area. All these down close candles got the same, they all got the have like a lowest low. This right here has the a higher opening, but they all have like the same low. So as far as what you want to be your order block in the case of, consolidate then move away, they're all right there. So you it's like you're pulling teeth to say this the order block, no, this the order block, no, this the order block. They're in the same spot. You know what I'm saying? Now, if it was a difference in the price, then you can have an argument, but it's the exact same spot. So who cares? And then we took off, right? And here's same thing on the ES right here. We got a BISI. We got a 15-minute BISI. But in this case right here, this is what I was talking about. And this right here is what I was saying about strong versus strong. Like this right here, I don't look at this as a strong fair value gap, because we got a down close candle, a up close candle, and then a retrace candle, right? So I'm not looking at this as a strong fair value gap. So if I'm not 100% sure that Picasso live up here above these smooth highs, if I'm not 100% sure that Picasso stay above these smooth highs, I'm not trusting this fair value gap right here. I'm not gonna do it, right? If I'm not 100% sure that that's what a draw is, I'm not trusting that fair value gap to trade back up there. All right. So that's what I mean when I talk about the strong fair value gap, because we got a down close candle, got our expansion candle in the middle, and then we got a retrace candle here. All right. So I'm not trusting that fair value gap unless I'm 1,000% sure that we're gonna come blow through these highs. Then we consolidated through midnight. At a 12:30 candle, we started an expansion, creating two BISIs here on the 12:30 and 12:45 candle. We traded back down into them at 3:30, touching midnight, push back up to the buy side, creating equal highs, push back down to midnight again at 4:30, push back down to midnight again at 5 o'clock, took out the short-term buy side on the 5:30 candle, pulled back down and kissed this tiny BISI right here that we created on the 5 o'clock candle. Did not go into it, just touched the high, just kissed the high. The low on that is 52.51.25. The low on that candle is 52.51.25. So it just kissed the high of the fair value gap, didn't poke into it, and then we took off and completely filled in the 15-minute SIBI that I had marked out that I was watching for price to drop into. But the NQ was given a little bit more strength, so that's why I was over on the NQ and not the ES. The ES was doing too much dilly-dallying around this time here. See all this dilly-dallying it was doing around there. And if I go over to the NQ, if I go over to the NQ, see the NQ looks different. You know what I'm saying? The NQ had better price moving as compared to this, right? You got this chop slop versus this right here. See, during this time, during that time frame. All right, see how price was moving during that time frame. And if we come over here during that time frame, it ain't doing nothing. Right. So, and then once we repriced the SIBI, we traded back down into tiny little BISI here on the 7 o'clock candle. Traded into that BISI. That's the lowest imbalance inside this price move right here. That's the lowest, and because there's no from this low up to that high, there's no imbalance lower than that. So we came down to that imbalance there, and then respect the volume imbalance. Then the next candle pushed up, right? Pushed up, kissed the high, and then here on the 9:30 candle, we dumped, came all the way down below midnight, taking out the sell side that was resting below all of the London. We took out the London low, came down, took out the London low. The next candle poked down into that 1 hour BISI, right? And now we have a 15-minute, a humongous 15-minute SIBI. We got a 15-minute breaker. So we got a bearish SIBI, a bearish breaker that's standing in between this BISI and this buy side. So you want to see how price reacts to consequent encroachment of this, right? You're looking for how price reacts to consequent encroachment of this SIBI. Consequent encroachment of this SIBI is right, look like it's right in line with the mean threshold of this. Yes, it is. This breaker, right? So mean threshold of the breaker is at 52.57.50, and consequent encroachment of the SIBI is at 52.57.75. So one tick off. So mean threshold of the breaker and consequent encroachment of the SIBI are in the same place. So between this buy side and this BISI, whose job is to push price up to that buy side, right, we have this we got a reclaimed fair value gap, and we got a fair value gap there. I say reclaimed fair value gap because we repriced it, got above it, and now we've traded below it, taking out sell side. Now we're rejecting the sell side, right? We rejected the sell side, respecting it. So that brings your attention to that high. That high sent us there. Now, to get back to that high, we got to go through this reclaimed fair value gap, this fair value gap, this breaker. So that's what you're watching to see how price reacts. You want to see how price reacts at 25%, which is 52, 55, 75, right? You want to see how price reacts at 25%. We have a breaker. The wick is inside the fair value gap. So you're looking at how price reacts inside this wick. That wick is right in line with that 25%. Okay. Now you want to watch consequent encroachment. 52, 57, 75. That's in line with mean threshold of the breaker. 52, 57, 50. All right. This is all the stuff you want to be watching. And this is an hourly fair value gap. So you want to see how price acting on a 5-minute in relations to bouncing off this hourly fair value gap. And then this right here is 15-minute breaker, 15-minute SIBI. So you want to look at how price is reacting on the 1 minute in relations to this bearish stuff. All right. All right, man. I trade both MES and MNQ, which depends on the one that presents better price action, which depends on the one that, yes, exactly. One that give you the better price action, that's what you go with. Because price is price. When it comes to like the ES and the NQ, price is price. It does the same thing. A lot of people scared of it NQ, like, oh, it moved too fast. It moved the same speed. It moved the same speed as the ES. It moved, you know what I'm saying? It moved the same speed. It moved one tick at a time. It's just that, you know, when you're trading without a plan, it's like you're scared. It's like I didn't expect it to do that, because you're not sitting there drawing out saying, hey, this right here is okay. This right here is my change in the state of delivery. I can expect price to come back there, right? And then if you enter up here, just say price went up and you entered right there and price started going up and then it came all the way back down. And now you panicking like, why is it coming down here? Because you didn't take the time to say, hey, it can come down to there. You didn't do that. That's why. And so you're thinking, oh, the NQ moving too fast. Oh, it's just moving too fast for me. No, you trading without a plan. Or not, I ain't gonna say you're trading without a plan. You're trading without the understanding of how price actually moves. And so it's like, it's shocking you when price do what price do. You get punched in the face. Wow, this was great. I appreciate that, Deborah. I'm definitely gonna have to run this back. I appreciate that, Deborah. Hey, man, let me tell y'all something, man. I need for more people to get exposed to this free information. So you know what I need y'all to do? I need y'all to hit like, and I need y'all to hit share. When y'all hit like and y'all hit share and y'all leave comments, Algorithm internet think that y'all like the content. And so it shares the content with other people. So hit like, leave comments, and hit share. Right? After the live stream over, come back, hit like if you ain't liked it already, and then leave a comment, because you can leave a comment after the live stream is over. Come back and leave a comment. Hit like, share it with somebody so the algorithm thinks, hey, they like this stuff, and they'll show it to other people. And more people can get exposed to this and not be out there dealing with the. Y'all know what we deal with in the trade community, man. Y'all know what we deal with in the trade community. Anyway, if ain't nobody got nothing for me, I'm going to call it. Let me see if anybody in the Discord. Ain't nobody in the Discord. If ain't nobody got now for me, I'm gonna go ahead and call it. I'm gonna take me a sip of this high quality H2O. I appreciate you for always liking. I appreciate you for saying you love the content. Here to learn and share. We love the content. Deborah, I always like. I appreciate that. I appreciate you saying you're a share. You are welcome, E-Rock. I appreciate all of y'all. I appreciate the faithful few. I appreciate the silent ones in the back, Silent McGee. And I appreciate I know you ain't text me while you on live with me. Texting me while you on live with me. Yes, yes. You're welcome. You're welcome. It's a dude. I can't. It's all he trade is fair value. He be dropping so many gems about fair value gaps. And like the stuff he be talking about with fair value gaps, I go back and I study it and I make it make sense in my head. And he got an accent. It's aljo. Let me see. Cause I don't be y'all know I don't be what Takeoff say? Cap. I don't be capping. I let y'all know, hey, I don't be inventing a lot of this stuff, man. I'm a student of the craft. And when people be dropping gems, his name Arjo. That's it right there. Arjo. All he trade is fair value gaps. And it's like he dropped so many gems about fair value gaps. It's crazy. He dropped so many gems about fair value gaps. And I've been trading fair value gaps. That's always been my thing. That's always been my PD array of choice. And it's like, so I've learned so much stuff from this dude. And when I say I've learned it, the way he explained it, right, it be making stuff click in my head about it's stuff I already know. And then it's like, I'd be like, oh yeah, let me look at it like this right here. And it helped me, you know what I'm saying? It's yeah, that's him. Yeah, you spelled it wrong, Hines, but yeah, that's him. Yeah, Arjo. But yeah, he be dropping so many gems about fair value gaps. And it's like a lot of stuff. He got this thing about a sharp turn. He talked about a sharp turn, and a sharp turn is like when you have a fair value gap going into a PD array, and then a fair value gap coming back out of that PD array, and it ain't got to be like back to back, but like how I got an anticipatory reactionary point, right? And if price displace and give you a fair value gap going into it, and then price dilly-dally in there for a little bit, and then to give you a fair value gap coming back out, he called that a sharp turn, and he used that for like that's like a sign of like a reversal for him or something like that. Something like I ain't never tried to trade sharp turns, but he do everything with fair value gaps. And if you want to learn gems about fair value gaps, go look at his content. This ain't even sponsored. It's just, that's where I get the idea of having a strong fair value gap. I can't remember exactly what video I saw, and he was just talking about like high probability gaps, and he was like his favorite one is like the consolidation candle on the third candle, right? But that ain't, I like the expansion candle on the third candle. That's what I like. I like the, you know what I'm saying? I call that the strong fair value gap. But it's like he, Check him out. Anyway, y'all know what I'm saying. I like the video when I got here 45 minutes in before start time. 45 minutes before. 45 minutes before. Oh, I wasn't sharing the screen. Y'all couldn't see, but I wasn't sharing the screen like that right now. I think I was sharing the screen. Y'all could see him. I think I. How do you spell his name? A-J-R-O. Let me share his channel. Let me share his channel in the chat. That's his channel right there. That's his channel right there. All right. What 100 said? I got something to teach. Got to get approved first. Fair Value Guys Tell You Everything episode. Yeah, I think that was it. Fair Value Guys Tell You Everything. I looked. He got a video that's called that. Fair Value Gaps Tell You Everything. Like he be going crazy on the fair value gaps. That's it, man. That's all I got. If y'all gonna trade today, trade safe. If you're not gonna trade today, please take copious amounts of notes so you can go back and study. Ain't nobody in the Discord. I'll just disconnect that now. So you can go back and study what you saw today. He ain't a Yahoo. What? Hey, yeah, man. It's your boy Run Your Gun Day Big Spider. Y'all know all that, man. Like, share, comment, so that the algorithm will think y'all like it, and it'll start showing it to other people, and other people can get this information for the free 99, man. I appreciate y'all for always tapping in. I'm gonna get me some breakfast, and then I'm see what the charts do for the I only got I get off at 11 o'clock, so I'm finna clock out early today. I'm about to clock out early. So if y'all gonna trade safe. I'll see y'all in the next week. Let me see. We going out of town Friday. We leaving Friday morning. I already gave y'all the breakdown of how we doing everything. Wednesday night, mentees, we gonna meet Wednesday night. Friday, the video dropping Friday, but I won't be in the chat. And then we won't do a Q&A on Sunday. And then next week we should be back to business as usual. I appreciate all the prayers. I dropped the funeral home information in the Discord. If anybody would like to send flowers or whatever you do with the thing, I dropped it inside the Discord. I think I put it in the announcement section, I believe. Don't let me lie to you, but I think I put it in the announcement section. Yes, I did. It's a Good Shepherd Funeral Home. I put it in the announcement section. If anybody would like to send flowers or whatever. Yeah, man. I see y'all in the morning at 9:15. Y'all be easy. Gone.